everyone, James from the Property Education Company. I'm welcoming Liam from We Life Insurance. He's an insurance broker. So we just wanted to expand upon what we're doing with what we can offer you, and we're looking to get We Life Insurance involved. So Liam, lovely to have you on. Thanks for joining me for this week's newsletter. So tell me a bit about We Life Insurance.
G'day guys, it's Liam, as noted. WeLifeInsure started about 3 years ago, and it was really born out of the idea of giving everyone access to quality life insurance products and not pricing anyone out. Typically, people get insurance either direct through their super fund or to an insurer direct, or maybe a financial planner. The whole idea is we basically are a replica of a life insurance broker who gives access to everyone to the market through loans. We just do the same thing, but instead through life insurance and income protection policies.
Wow. So you mentioned a good point there. A lot of people either go direct or go through a financial planner. What's the benefit of going through you versus going direct or a financial planner?
Good question. So both have access to the same quality life insurance policies. The main difference is how the service is provided, basically. So from a financial planner point of view, typically insurance is part of their service. People also get goal setting, retirement planning, investment management, etc., from a financial planner. But what happens is a financial planner gives advice on what level of cover a person should take. They do this by taking the client's goals and then looking at their assets and liabilities. They then take this to market to find the best option and then recommend the level of cover and who they should go with. They also may charge a fee for this and can take a little bit longer as they have to provide you with a statement of advice. Now, from a life insurance broker's perspective, we specialize in life insurance. We only do life insurance policies, which includes life, TBD, income protection, and trauma. The biggest difference is how we deliver the service. We don't provide advice or tell people what to do. We educate the client on their options, how it works, pros and cons, what the covers are generally used for. And we do this in a fully transparent way. Basically, we share our screen and show people 90% of the market that's available for them and all their options. So the key here is the client chooses their level of cover. We just guide and give them access, and then they balance cost versus protection. For this service, we don't charge anything from the client, and we can also deliver this straight away, basically. Sometimes we'll walk through covers with people. They're pretty happy. They select what they want, and we can do an application on the spot.
So this main cost of effectiveness of having a life insurance broker, as well as just the turnaround time on actually getting a policy. Like I know some financial planners, they'll take 4 to 6 weeks to get back to you when they've got other things involved. But if you just want life insurance and you want it done properly and quickly, we'd come to you. So next question is, why would you need life insurance? Like keep in mind, like say for example, myself, I'm a younger guy, I've got a few assets, I've got my home. Why would I need life insurance? Why wouldn't I wait till I've got kids or something down the line?
Yeah, absolutely. Really good question. So I see life insurance policies as a type of risk solution for you. So you said you have a few investments, etc., here and there. If you couldn't work due to injury or illness, would you be able to afford those investments, or would you want to have to sell them to survive financially while you can't work or you have a health issue? Whereas this, at a little bit of a cost, will cover you for that and those treatment, etc.
Right. So it just really is a great form of protection across the board and not just thinking, oh, life insurance, I'm going to die. And that's what's going to
No,
cover all my debts.
do you want to be independent as well? So you've moved out of home. Do you want to rely on mum and dad to help you out and use maybe their retirement funds, or do you want to be self-sufficient? That's another question we talk to young people for. Maybe you just want a part of an insurance. Maybe income protection is the only thing you need. You don't actually need life insurance. So if you die, because there's nowhere it needs to go. If I take my scenario though, for me, insurance is really important. I have a wife, 2 young kids under 4, and a mortgage. If anything was to happen to me, whether I couldn't work or I passed away, it's so important that my family is protected and financially okay. Because I don't want to have to sell the family home or have them move or move around my children that are in school and kindergarten and all that sort of stuff. So for me, it's just I can go to sleep at night and have them protected, really.
Yeah, make sure they're going to be looked after. Now, speaking of who you are and what your scenario is, who would be the clients that you would think you probably should consider this mostly? Now, probably everyone needs life insurance, I'm sure, and some form of income protection, but who's the client like, if they haven't thought about it, who's that person that probably should start thinking about it now?
For me and personally, anyone with a family, anyone with dependents, kids, it's really important to review and check out your options and then work out whether you want it or not. It's completely up to you. There's no sort of you have to take it. It's just look at your options. Anyone that's a good sort of trigger to look at it is when you buy your first house. I don't know about you, but it took me a while to save up for a deposit and buy the house, and now I'm in love with it. I don't want to lose that because I can't afford repayments because I'm sick or injured and can't work, especially with the cost of today. So the two big triggers here are family, if you've got a young family or thinking about starting a family, or you take on debt for the first time or increase your debt situation.
Yeah. So the main thing is like, keep in mind, I'm just thinking now, I've just bought my first house. I've now got this big mortgage that I've got to start paying down, and I may not be used to how large a repayment's going to be. I now have to pay another form of insurance on top of all the other insurances I have to pay for just my content insurance, my home insurance, etc. How can I possibly afford, or what are the ways I can do to afford probably the expense of life insurance? And is it going to be costly?
Really good question. I get that quite a lot from first home buyers because, yeah, it's a bit scary. You never know what your payments, especially if interest rates rise again like they did not so
Mm,
long ago. Big one here is we talk about how to structure insurance. So there's sort of two ways you can pay for insurance. You can actually pay it through your super fund, so using your super balance,
wow.
or you can pay it outside super, so out of pocket.
Mhm.
So it's really a balance. If you pay inside super, the insurer gets a tax rebate, which they pass directly on to you. So it's actually 15% cheaper. The con to it, obviously, is you're taking from your retirement funds, which are meant to look after you. But I always think about it, I want to get to retirement in a good shape financially. So I'm okay with that side of thing. But if you pay, you can pay for income protection outside of super and it's tax deductible at your marginal rate. So there's a couple options you can choose. So for me, in my situation, cash flow is king for me. So everything of mine is actually inside super. And then as things lighten up, maybe I reduce debt, my kids become independent, I might pull some things outside of super. So you're not stuck in either way. And from our side, we do annual reviews for clients. So each year, whether it's a 2-minute call or 3-hour call, whatever it may be, we talk about that, see if they need to make any changes, decrease, increase, whatever they need, really.
Okay, so speaking of increasing and decreasing policies, like say I've already got my insurance organized, is it worth me coming to see you and having a look, or have I got you've got your insurance, that's okay. I probably don't need to think about it now.
Never hurts to review anything. But think about your mortgage, right? Every couple of years, you should actually look to refinance it, or at least look at your options. Often your interest rate may not be competitive anymore. So I see a lot of people that may sit on their insurance for 5, 10 years, whatever it may be. They come to us because it's too expensive and they're about to cancel it. I don't really want them to cancel it, especially if they need it. So what we do is we look at reviewing it to the market, seeing if there's better options. Again, we've got 10 out of 11 insurers available. So we've got a good amount of people to look at. And then basically we'll look at either reducing it, changing it, increasing it, whatever they need. But we'll compare it to the market and then come up with a strategy that suits them best.
Right. So just how like we do rate reviews for our clients, you're doing rate reviews for your clients, for our clients, I should say, when it comes to looking at their insurance policies. But you also can look at changing your policy. Yeah.
Yeah, absolutely. So what happens is the term you guys use refinance, we use requote, same thing. It's
Yeah.
just a coin turn. But basically, what we would do is with insurance, obviously, right now, if I take my situation, young family, mortgage, my risk and my debt is high. Hopefully, over time, I'm paying my mortgage down. My kids become independent. So my risk goes down. At that same time, I want to reduce my cover over time because I don't want to pay for something I don't need, which helps. And that's the strategy we talk to clients about is let's tie our insurance to a financial outcome that we would want. And then each year when we have a chat, we can easily go, hey, you paid your mortgage down by 100K. Let's reduce your life because your strategy was, if I die, I'm going to pay off my mortgage.
Fantastic. Thank you so much. Well, I don't want to keep it for too much longer, but I want to know what's the golden piece of advice you'd give for any client who's looking or thinking about life insurance? What's the one key thing you could take away and go, you really got to consider this?
Oh, good question. I think just reviewing your insurance, don't let it sit for too long because you will pay more than what you need. I also think, as I said just before, tie it to a financial outcome. Understand why you've got it because that will help your decision making in 2, 3, 4 years' time. Because the structure of insurance is usually called a variable age step, which means each year it goes up with your age as your risk goes higher with more things that could happen to you. So it can get a little bit out of hand sometimes. So it's really good to tie it to a financial outcome so we can review it each year, reduce it as needed, or change and amend it as needed. So I think that's really important.
Well, Liam, thank you so much for your time today, and thank you so much for jumping on and giving all this information. Look, I'm sure our clients will be reaching out to you soon because I know with myself, I need to be thinking about my life insurance too. But thank you again, mate. And look, we hope to be hearing more from you soon.
Appreciate it, James.